Howdy there, folks. Welcome into the reaction channel. I got two to react to in this one here today. Okay, first video up here. Nvidia investors have no reason to sell the stock in the long term. I want to hear what Joe Terranova has to say on the subject and kind of give my input. And I think this even goes bigger than Nvidia. And thinking about, like, you know, after a move like this is incredible for Nvidia, right? 25% today. Like, is it smart to take profits? Is it smart to take some off the table? So I want to cover that subject. I think it's an important subject. So obviously that's more of a bullish video. And then I thought we'd balance it out with more of a bearish video. The AI boom could collapse like the late 1990s .com stocks. Okay, so little positive, little negative. I want to react to both and kind of give my opinions and perspectives. I appreciate everybody joining me as always, folks. Tomorrow is the big day. The big day. I make the new moves in the Patreon portfolio. It's only $19 to get in there. You get to see the moves I'm making in the market, how I'm running that portfolio, plus be part of the Discord chat in there. It is a no-brainer. Make sure you join there. That will be pinned comment down there. I will be going up on price shortly for anybody that doesn't join here in the very short term. So do keep that in mind. I don't know the exact date on when I'm going to go up, but I'm probably going to go up to $25 a month for that tier sooner rather than later. So yeah, that'll be pinned comment down there. Let's get into this.
Keep surging. Those shares having their best day in years on the back of earnings and sending several other names higher as well. Here's your scorecard with 60 minutes to go in regulation. NASDAQ, where the action clearly is today, as chips and mega caps get a really big boost. Not so much for other parts of the market, though. The debt ceiling duel continues to be a bit of a drag, and rates continue to move higher as well today. Brings us to our talk of the tape. To trim or not to trim? That really is the question as Nvidia shares hit new all-time highs today. Let's ask our panel then. Joe Terranova of Virtus and Hightower Stephanie Link, both are CNBC contributors. Alger's Ankur Crawford is with us here at Post 9 as well. It's great to have everybody with us. Ankur, I'll begin with you because NVIDIA is your third largest position. When you saw the move in the stock, what was your reaction? And now you've had some time to digest all of this. What are you thinking now?
Well, let me start with when I saw the revenue guidance, I almost fell off my chair.
Yeah.
And the move in this.
What did I tell you guys yesterday? I said, that was the most insane revenue guide I've seen in my 15 years of being in the stock market. And when I said something like that, I'm not just going to say that to say that. And what I heard continuously, because I watched a good amount of CNBC today, every single other person that's a Wall Streeter out there said the same exact thing, right? Like, that's the most insane, shocking, absolutely shocking. To come in an $11 billion guide when $7 billion was a consensus, $9 billion, actually less than $9 billion was even the most high estimate. Come on, man. Crazy.
Was largely, given the revenue guidance differential, it was to be expected. So I think what we're seeing today is a discovery move in Nvidia. Oftentimes when you have the discovery move, it is something brand new to the market. People are finally understanding the $300 billion TAM opportunity that NVIDIA has laid out and how they can get there. In my opinion, the opportunity is so big. It's bigger than, any other market that we see today. NVIDIA is not a sale.
I mean, you went into today, Joe, saying, man, not you, but I'm saying collectively, man, the value.
I agree with her. It's not a sell. You can choose to stay out of it. If you're like, I don't really understand how big this opportunity is. Is this I can understand not buying the stock, right? You don't have to buy Nvidia, but to sell it if you're already a shareholder, it doesn't make sense.
It looks big. It looks too rich. The stock is more than a double heading into the number yesterday.
That forward P is likely massively inaccurate. It is very possible Nvidia right now is trading at a true forward P of 40 or 50. Okay. And if you're running that number, then you got to run next year's number, the forward year as well, right? So when you see these sorts of numbers and it looks like, oh, gosh, that's so high, 83. No, that number's massively wrong. Analysts are going to insanely bring up their EPS expectations. And guess what? They're not going to bring them up enough because it's going to be even better.
$300. $300 yesterday at this very moment when we started our lead in to what these earnings were going to be. And it was near 400 after the earnings came out. The stock's cheaper today on a valuation basis than it was yesterday.
But we got exactly what we wanted. We got the guidance that did what? It validated the energy and excitement surrounding generative AI and AI itself. It placed the stamp on it. It said it's real. We had the evidence. We have statistical evidence now that supports the investment thesis. And it has sustainability, not just in the near term, but in the long term.
So what do you do as a shareholder today? And Ankur, I'm going to ask you the same question. You've seen this incredible rise. You see what happened at the reaction that we're still witnessing in the market today. Are you tempted to take some profits? We said to trim or not to trim. That's the question. Because of this move, do you take profits or not?
I wouldn't touch Nvidia until Nvidia proves to you that there's a reason to sell it, and I couldn't conceptualize what that reason would be at this point. I would not touch Nvidia right now if you are long. I would just leave it alone.
How do you address that?
I wholeheartedly agree with that, and in part because Jensen cited two things that I think are new to the market.
The CEO, Jensen Huang.
Jensen Huang, the CEO. Two things that are new to the market. A, they are just not a compute platform. They are a networking, compute, software platform, which is basically Gen AI in a box. A. B, he talked about $1 trillion market that is about to upgrade their entire CPU base. That is the discovery information for the market that is driving the stock today, because it gives you duration to the earnings.
Yeah. I mean, sort of everybody.
So first off, would I trim some Nvidia? Let's say I had a position in Nvidia. Let's say, I think I have close to $500,000 in Meta stock, roughly, or maybe it's 450,000, something like that. Okay. So let's say I had the same amount in Nvidia. Would I sell a little bit today? And the answer to that is no. At the end of the day, you got to let that baby roll. I mean, dude, we're at the inning one of AI in terms of AI chip opportunity for Nvidia. Inning one. There's no point in trying to rush out of that stock. What you're ultimately going to do is likely every share you sell of a stock like Nvidia, you're just going to regret it. I used to be a shareholder of Nvidia, made good money on the stock. Guess what? I regret selling my stock. I have 0 shares of Nvidia, and I regret it all. Okay, that's the bottom line when it comes to that. You let that baby play out, man. It's just an incredible company doing incredible things. And who's their even competitor? They got one competitor, in my opinion, one true competitor. AMD. That's it. And AMD is actually, I think, a little behind on AI.
And I think in the same thing is it justified?
Lisa and the team will catch up, though. They will. They're so phenomenal at AMD, but let's be honest, Nvidia's in front.
Look like moving forward. Sure, the stock could pull back from here. I mean, that was one of the views of Stacey Rascon, whom we spoke with going into the print, and then today on halftime told us this about where shares can go.
At some point, we will probably get digestions. They happen, and the stock may react to that. But if you think about where we are on this, we are, and again, I said this yesterday, we're very early in the trends of both AI and accelerated computing. This is really just getting started now.
It's hard to, put your arms around that concept. It's just getting started now when you've witnessed, and we all have witnessed, these shares in all these kinds of companies go crazy.
We did speak about this in prior weeks, that we were in the early.
Go crazy. Nvidia barely just broke through a new all-time high. I mean, you make it sound like the Nvidia's at 1,000% above its all-time high. They barely just broke through their all-time high. I wouldn't call that going crazy.
And think about the competition that these companies have from an investment perspective. There literally is not any competition. So if you look at where Nvidia is and you question whether it's the valuation or the ability to keep going higher, the simple analogy I could make is we're in the middle of playoff season for the NBA and the NHL. Would you take Jimmy Butler off of the Miami Heat? Would you take Matthew Tkachuk off the Florida Panthers? They're clearly the MVP of both those teams, and that is exactly what Nvidia is. It is the MVP of the market right now. And the other point on that, which I think is incredibly important, is a lot of growth managers still don't own Nvidia, Scott. So a lot of the moves that were made in the Joe T strategy, I'm very satisfied with, because we got ahead of recognizing momentum that was building, and we were in there and we were adding names like Adobe and KLA Corp and Nvidia. When you look at some momentum funds, they don't even own Nvidia yet.
Good point.
It's not logical to me.
Matthew Tkachuk. I wonder if that's Keith Tkachuk's kid, because I don't follow hockey, but I remember way back when I was a kid for Phoenix Coyotes, had a guy named Keith Tkachuk. It was pretty good. Okay. Now, in regards to Palantir, spend a moment on Palantir. In regards to Palantir, right? Revenue next quarter is supposed to be up. I think analysts have them at 12%. based upon Nvidia numbers, based upon what Alex Karp said on the latest conference call and what he said in the latest press release, I'm going to go out there on a limb and say Palantir's probably going to crush numbers, probably going to crush yearly guidance, probably bring up all their numbers, and that's going to be a whole new off to the races 1750 situation. We'll see what plays out. It's not in the bag, but I'm just going to put some pieces together and say that's probably going to happen. Next up here, AI boom could collapse like the 1990s. Let's go bearish, baby. Hear what they have to say and talk about this.
Enthusiasm surrounding AI stocks is distracting investors from recession risks. Economist David Rosenberg is founder and president of Rosenberg Research. David, great to have you with us. It certainly, when you look at this sector, it doesn't feel like we're talking about these companies living in an economy that is about to go into a recession, an economy that's about to hit hard times. Right. What do you think? I'm just curious.
Don't forget when the iPhone got launched, 2007, right before the great financial crisis, right? And you could have looked at it and said, well, that's a reason to sell Apple. Like, give me a break. Like, if you understood how big the smartphone opportunity was and how big that was going to be over the next 10, 20 years, like, you should have been buying Apple stock throughout the Great Recession, because that was just all a short-term crap thing.
I think the Fed thinks about this sort of bubble-like action in a sector of the economy. Do you think it makes them think that their job is not done?
Bubble. This is something they kept talking about, fast money. Bubble. Bubble what? We're at inning 1 of AI. Like, what? What are we talking about here? That's literally like going back to 1981 and saying all this PC stuff, this is just such a bubble, right? And it's like, dude, you're inning 1 of the PC revolution. And this is something that there's going to be hundreds of millions of units sold per year, right? Crazy the way they talk.
Well, I would say that there's no question. I think that we have a price bubble, and we had a price bubble with the dot-coms and the internet back in the late 1990s. But there's the financial bubble. But then there is, the
I wouldn't be surprised if Nvidia's $1,000 in 2 years.
Real impact on the economy, and you could not argue that.
Meanwhile, people are like, "Oh, I'm going to buy Nvidia when it drops down 200." Good luck.
That was a game changer for productivity.
So wouldn't I if that happened. Good luck on getting that.
So we had a real-time shift in productivity and what that meant for the corporate cost curve in general. And you had a financial bubble at the same time. And so they can coexist. I mean, if you look at the 6-month chart of the NASDAQ 100, you have to be blind not to see that, okay, this is actually looks very weird and it's way overextended. But if I'm at the Fed, I'm looking at this as Paul Tudor Jones said, I think last week on Squawk Box, that this is a major productivity accelerator. And you're at the Fed, you're thinking, okay, this should actually help reduce the corporate cost curve and should be disinflationary. And so it actually, from a real economic sense, would work towards their anti-inflation objectives.
David, it's Tim. Thanks for joining us. When we look at what interest rates are doing, and
by the way, I was spending some time looking at the early PC revolution of the 80s, right? And guess what? There was a lot of talk in that early PC revolution of the same exact things we're hearing about today. Oh, this is going to take all the jobs away because now these computers are going to, do everything for us and this and that, right? And it's the same exact talk you hear nowadays, right? All the computer did was just help us prosper in a massive way like we never prospered, and companies earn a lot more money and obviously a lot better situation, and you can find any bit of information right from your pocket nowadays, right? And that's incredible because it used to take you hours, days, weeks, or months, or never be able to find out certain information that now we can find out in seconds, right? And so the same talk of the early 80s around PCs is actually the same talk you're hearing around AI. Oh, it's going to eliminate so many jobs. All it's going to do is actually open up tremendous opportunities for many things over the next, in my opinion, 20 to 30 years.
Well, thank the Fed and having more conviction that the Fed has more conviction staying the course. It certainly adds to your thesis, and the thesis that, first of all, the cost of financing a lot of these corporates, their earnings profile are changing dramatically, and that rates are staying higher for longer. Talk about how you think that the Fed, or maybe you don't, but where the Fed is truly on their course here, but what that means for equities, especially when so much of the corporate earnings structure has been tied to zero rates for so long, and that equities aren't repricing that.
Well, it depends, which index you're looking at and which sectors you're looking at. So I don't think you can look at the stock market right now as some sort of homogeneous entity. Okay, so if you added up the three most economic sensitive sectors of the market. You added up the banks, you added up consumer discretionary, and you added up the transports. Okay, they have the highest torque to GDP. They're down more than 30% from the cycle highs. They're actually behaving in the exact same pattern they have going into the past 4 recessions. You look at the S&P.
That's a great point he's making. And I'll challenge you to this, okay? Anybody out there, pull up a 6-month chart of the Dow and Russell versus QQQ and tell me what you find. 600
to the Russell 2000. They are still, even with the better tone this year, they are still in fundamental bear markets. So, look, when you have a situation where the S&P is basically now 27% technology, and technology is growth, which means it's a long duration asset that, yes, will look through the gyrations and around the business cycle. Doesn't mean they can't get hit. And we saw what happened back in the early 2000s. But by definition, growth stocks are going to react a little differently to the economic cycle than the pure cyclicals. And the cyclicals are giving you, just like the inverted yield curve is giving you a recession signal.
Yeah, great points there. Appreciate that as always, folks. Thanks so much for joining me. Thanks for being subscribed. 27,300 plus subscribers on the channel. Make sure you get in my Patreon. That's going to be pinned comment down there to access that. If you want to apply for my private group, then check out the description area. Okay, much love as always and have a great day.